Welcome to Midweek Macro. It is Wednesday, the 4th of February 2026. It's just gone 3 o'clock Eastern. And as per usual, we have a lot to talk about. We are going to look through the equities markets, the commodities markets. Of course, I'll have a look at a couple of key articles as well. Again, I will link to them in the show notes. But I should start by saying that today's midweek macro is actually sponsored by First Phosphate. First Phosphate Corp is a Canadian mineral development company focused on extracting and purifying phosphate for the lithium iron phosphate LFP battery industry with significant projects in Quebec. Highly recommend you go and check out First Phosphate. That's at firstphosphate.com. Again, thank you to First Phosphate for sponsoring today's midweek macro. So plenty going on. The big word of the day is bounce back ability. Now, for those that might be familiar with Premier League football, it was a word that was used quite a few years ago to describe a team that looked down and out and then they turned it round. And that's why we have bounce back ability. It seems as though we are possibly experiencing that in gold and silver this week. But before we go into the charts, what I think is important to note is I've linked to the following article in the notes that are going to come with this video. And that is that Trump has launched a $12 billion minerals vault in order to cut China's reliance. Now, on the face of it, doesn't matter what country you're from, this makes a lot of sense. 21st century, a lot of energy issues, a lot of energy challenges. And if we're going to try and be as self-sustaining as possible, no matter what country you're from, then you want to be able to, make these things at home, or at least have these strategic partnerships in place where you can acquire these goods and materials. So I think it's a good idea that this thing is going ahead. The article is dated from the 2nd of February. However, I'm not the only one that has thought this, that if this was in the pipeline last week, and of course, if you're going to fill a strategic reserve of something, you might as well fill it at a lower price level. Then maybe behind the scenes, I'm just saying, maybe behind the scenes, there was a lot of talk between, say, the banking system, maybe JP Morgan, other banks as well, and the Trump administration about needing and wanting lower prices, silver prices, in order to maybe stockpile this plan, basically, or the minerals vault, sorry, that is on the table. I'm not saying that has happened, but interestingly, funny that we saw a lot of increased volatility in the last week. Silver went down to about $74, $75, depending on what chart you look at. And then all of a sudden, it started to recover. And voila, all of a sudden, the US has got a minerals vault, maybe with a lot of new silver in it. I'm just saying, I'll leave you to put two and two together on that. The reason I mentioned JP Morgan is that, again, on Monday, the 2nd of February, JP Morgan came out and said that they actually see the gold price reaching $6,300 by year end. Again, I'm putting two and two together here. I think there's something fishy going on behind the scenes. But ultimately, for those that are listening, and I appreciate that a lot of people are already subscribers to the Contrarian Capitalist, you will know that whatever happens within the paper markets, the fundamentals are there, especially in gold. Central bank buying is strong. It continues to get stronger. More retail investment is starting to take a look at gold, hedge funds and pension funds and so forth. Ultimately, the key fundamentals are in place. It's the same with silver as well. Supply is not going to catch up with demand for the foreseeable future. That's why we have a supply deficit. You can't just click your fingers and the silver mine comes on like that. These things take years. Obviously, it depends on the jurisdiction as well. And we have to remember that silver, about 70%, 70% of silver is actually a byproduct. So there's only about 30% of silver mines around the world are purely for silver. The rest of them come from copper, zinc, and so forth. So we have to remember that the ultimate 30,000-foot view of the fundamentals, that's still there. That is unlikely to change. That being said, there has been a lot of volatility in the last week, and I think everyone should brace themselves for more volatility ahead. Talking of gold, we have gold sat at $4,937. Just going through the charts, I'll bring them up one at a time because sometimes trading view could be a bit funny if I bring up multiple charts. We have silver at $87.25. We have platinum currently sat at $2,227. We have palladium sat at $1,764. We have copper per pound. So we look at per pound on the contrarian capitalist. Copper per pound is at $5.94. We have WTI West Texas Intermediate currently sitting at $64.35 on the week. What I'm interested to see is what happens moving forward. For those that are familiar with the traffic light system in the commodity wrap, you'll know that I went green last week on a lot of commodities. That didn't play out so well. Well, it did depending on your definition of short term. This week, and I imagine for next week as well, again, I've gone bullish on everything. I think it's a technical correction. What a technical, some technical positions have been met. Again, looking at the charts at the moment, the 20 in gold, the 20-day moving average was taken out. The 50-day moving average was briefly taken out, but again, it's bounced back up since then. So again, for those that are more technical chartists, you might look at those key retracements and go, well, that's absolutely fine. Again, I'm also putting it down to the fact of this mineral vault as well. And of course, we also have seen there are big differences between COMEX, LBMA, the price of paper, gold and paper silver effectively. And also on the Shanghai Gold Exchange, the SGE. Also, we have to remember that the SGE increased their margin requirements as well. We saw the CME do that, I think it was in December 2025. And that saw people throw their toys out the pram a little bit. It's the same over in Shanghai as well. So there's been a couple of other reasons why there's been a bit of increased volatility. There are loads of factors at play, and I am well aware of that. I would also suggest that early on this afternoon, I finished recording a podcast episode with Brent Johnson of Santiago Capital. That podcast is available to paid subscribers. I highly recommend you go and check that out as well. Brent effectively was saying that there's so many different moving parts at the moment. Although he's identified a place where he thinks things could break first, he was saying that because there's so many different things going on, volatility is going to increase within almost a new paradigm, so to speak. Again, I'd highly recommend you go and check out that episode, contrariancapitalist.substack.com. I think gold and silver and everything, I think it's going to continue to increase moving forward. That's why I remain short-term bullish. Again, I think that the underlying fundamentals, just remember that they have not changed. They are very unlikely to change moving forwards. We're seeing supply and demand issues. Just touching on PGMs as well. Yes, platinum is forecast to have a small surplus this year, but between 2027 and 2030, the structural deficit is going to come back. And that's according to the World Platinum Investment Council, the WPIC. And also, actually, in palladium, they're projecting a surplus in palladium. But again, because of its interchangeability with platinum, I still think long term, palladium is very bullish. And we also have to remember with palladium that it's nowhere near its all-time high, which was a few years ago, and it's about 3,400 US dollars. So we're sitting at about half price at the moment. So palladium is always an interesting chart to look at. Before we go on to the equities markets, a couple of other articles to bring to your attention. And again, I will link to these below. Kazatomprom, I always get that name confused. Big Kazakh uranium company. They're planning a 9% uranium output rise this year. I just thought that was an interesting read to bring that to your attention. Of course, we've seen uranium on an absolute tear recently. Again, we look at the futures. I appreciate the futures is quite opaque. But again, it's a case of onwards and upwards the last couple of times we've checked in. So it's interesting that Kazatomprom are going to, well, they've changed their forecast and they're looking to increase output by about 9% this year. So that's from 71.5 million pounds up to 75.4 million pounds. Again, with the uranium, the fundamentals are there. The fundamentals are not going to change, but I highly recommend you check that out. Other interesting articles to look at, again, it's the fact that the US January jobs report, that's been rescheduled for February the 11th. So the fact that's been pushed back a week's interesting. People talking about the yen as well. Also, Kevin Walsh is the new Fed chair, or will be the new Fed chair come the end of May, start of June 2026. A lot of people were saying, well, he's very hawkish. I said the same. Normally he's hawkish. But of course, President Trump and Secretary Besson, they're going to want a more dovish Fed. We've seen President Trump come out with comments along the lines of, well, I think, I'm paraphrasing this, Mr. Walsh knows the direction in which we need to take things. So again, I want to know how that's going to play ball moving forward. And again, Brent Johnson said the same thing as well. Really is a case of watch this space. It's the same with the midterms at the end of 2026 as well. You'll have a look at the poly market of the week. I said this back in my 2026 predictions at the start of the year that I thought that the Democrats would take the House and the Senate in the midterms. Apparently, I'm not the only one that thinks that. So poly market of the week looks at which party will win the House in 2026. That is currently sat at 83% in favour of the Democratic Party. Now, I'm not sat here saying that that's what I want to happen, because, again, what we want to happen in the markets and what does actually happen are two completely different things. We have to try and take that emotion out of it. Again, just looking at the poly market chart, I'm not the only one that thinks the Democrats are going to take the House. I think they'll take the Senate as well. And what I am looking forward to doing is speaking with Tom Luongo of Gold, Goats and Guns. We're scheduled to record on Friday, the 6th of February in the morning. And the reason I'm looking forward to catching up with him is I want to get a more boots on the ground feel about President Trump and everything that's going on in terms of changing the new world order and bursting, trying to break them down and trying to make America stronger. I know he's got it in for the British. That doesn't help with this accent. I appreciate that. But Tom's always a fascinating person to talk to. Again, we're scheduled to record on Friday, the 6th of February. Having a quick look at the equities markets. What we have here, actually, before I do that, I should actually mention oil. With oil, again, there's so many different paths on oil that we have this proposed, or this idea of this oil glut. Now, I don't think that's technically true. To the people I've spoken to in my own research, I don't think that's true. So I think the prices are going to have to go much higher. But I still think that is at a whim of geopolitical news. So we've seen the last couple of weeks, obviously, Venezuela happened at the start of January. We've seen US and Iran or Iranian tensions sort of increase. They've now decreased a little bit. And again, all you have to do is look at the oil chart, even on a daily basis or just a weekly basis, to understand that I still think it's a very news-driven market at present. I don't think as many people are paying attention to the fundamentals as they should do. So just watch that space with regards to oil. Moving on to the equities markets. Again, it is 3:17 Eastern, so correct at the time of recording. We have the S&P 500 at 6,229, slightly down on the week. We have the Nasdaq down. It sits at 24,944, again down on the week. We have the Dow Jones actually up on the week. That sits at 49,568. We see the VIX index, so again, the thing that measures volatility in the S&P 500, that currently sits at 18.77. It has currently a red candle, but it is showing positive numbers on the week. It says it's up 7.4% at the time of recording. Again, just bear in mind that anything between 15 and 25 is normal expected volatility. So at 18.73, it's smack in the middle of that. So it's not indicating anything significant as far as I'm concerned. And arguably the most interesting one of the lot is that dollar index. And that dollar index is very important because it has more than likely broken a trend line, and there could be significant downside moving forwards. I'd recommend again you go and listen to the episode with Brent Johnson. I didn't on purpose. I did not ask him about the milkshake dollar theory. I wanted to make the episode a little bit different because again, this is a contrarian capitalist. There's no point being vanilla with these recordings. So I didn't ask him about the milkshake dollar theory, but we did talk about the dollar strength. And what Brent pointed out was that the dollar doesn't need to go back to 110. It could do, but it doesn't need to. Even if the dollar remained as where it is now, which is at 97.64 at the time of recording, even if the dollar just went sideways, that would likely catch a lot of people off guard. And that will have a lot of ramifications for the rest of the world, because then you start getting, you're talking carry trades and everything like that. That all starts to get involved. Again, his way of explaining it was absolutely superb. He does a better job than I could do of it. But the point being that on a monthly chart, as Paul Kiker said last week, the dollar broke the trend line. Now, that means one of three things are going to happen. Number one, you're going to have this structural decline of the dollar. That's the Luke Groman camp of thinking. That's my personal view of what I think is going to happen. But because it's broken the trend line, option two is it just falls off a cliff. It could happen. I'm not saying that it will, but it could. The third option, though, is that it does catch people by surprise and it either consolidates or it rises back up. Now, I think that's unlikely to happen, but again, that's also the most contrarian view. So we have to always have an open mind, and what we want to happen in a market and what does happen, they are two different things, and we have to remember that as well. I've sat here over the last few years, even before the founding of the contrarian capitalist, even when I was writing down goals years ago, I wrote down there's going to be significant crash. I say the same thing every year. I didn't say it this year because I think that what I think would happen and what does happen are two different things. Thank you, Bruce. Yes, just on that. So for those that might not be aware, I do have some skin challenges at the moment. I actually went to the dermatologist a couple of weeks ago, so I've been given some creams, so I think my skin is reacting somewhat not so good to those creams at the moment. It's a bit raw this afternoon because I was out in the sun running some errands this morning as well. So thanks, Bruce. I appreciate the comment there as well. But getting back to the dollar index, there's three things that can happen. And again, the most contrarian view is that it could just go up. What Brent was at pains to point out is that the dollar could just go sideways. And if that happens, then that means there's going to be a lot of strength out there, or a lot of relative strength in comparison to, say, the pound, the euro, and the yen. He also believes that it's going to be Japan that likely breaks first. And again, for those that follow the market wrap, you'll know that we have a look at Japan every week. We're looking at the yen, we're looking at the 10-year government bonds. And ultimately, Brent does think that that is likely to break first, if anything, around the world. Going back to podcasts that have been that have taken place this week, I should say that I'm in transit next week. So I am flying from Mexico to Paraguay. I've got to deal with migration because I still haven't been given my residency, permanent residency, I should say, in Mexico. So I'm dealing a lot next week with paperwork and flying. That's why this week on the Contrarian Capitalist, it's been very podcast heavy. Of course, the midweek macro as well. It's been very podcast heavy this week. Next week is going to be very written heavy. So we're going to have a look at a couple of portfolios. We're going to do the Contrarian Capitalist Deep Dive number 2. I appreciate there's been a lot of new paid subscribers and founding members recently, and that you want me to write more. So therefore, there's going to be a lot of writing done for next week. They will be pre-planned, again, because I will be in transit next week. That's the reason it's been very podcast heavy this week, because of transit taking place next week. We've had some fantastic guests on so far this week. We had First Phosphate CEO John Passalacqua, who spoke about phosphate, funnily enough, LFP batteries and strategic supply chains. As mentioned at the start, First Phosphate is sponsoring both this midweek macro It's also sponsoring a couple of newsletters later on this week as well. So I'd like to thank First Phosphate for doing that. There's also a written post, and it was to do with David Morgan talking about what comes next for gold and silver. That was via Money Metals, number one gold dealer. I will point out I had nothing to do with that. It was more of a repost, to be fair. And again, I really enjoy the work that Money Metals does, so I highly recommend you go and check them out. We also had, I've mentioned many times, Santiago Capital's Brent Johnson. That is available to paid subscribers at the time of recording. And finally, I had ex Southampton and England international Matt Le Tissier. Now, for those that are familiar with Premier League football, you are likely going to know the name Matt Le Tissier, an absolutely fantastic player. For those that might not know who he is, I'd highly recommend you go and at least look at the Substack post. I've linked to his greatest goals on YouTube. It's about a 5-minute video. Highly recommend you go and check it out. He was an absolutely brilliant player. However, what he's done in the last 5 or 6 years is his life has changed completely with the way that he thinks about things and some truths that he got told. And he shared his story on that. We spoke about anything from central bank digital currencies all the way through to digital IDs, life post 2020 and everything that was going on then. Matt is a very funny guy. I'd highly recommend you go and check that out. It was an honour and a blessing to speak with a Premier League footballer. I'm not even a Southampton fan, but I have to say he was certainly one of my icons growing up as a kid watching 90s football. That episode is available to everyone at the time of recording. And mentioned Tom Luongo is on the podcast we're scheduled to record later on this week on the morning of Friday the 6th. And again, looking at the week ahead, or looking at next week, I should say, again, there's going to be a lot of written posts next week. I will also attempt to get in and do that midweek macro. I don't land until about lunchtime on Wednesday. So by the time I get in and settle myself down, make sure the internet's running properly down there, I should be able to do a midweek macro. So again, keep your eyes out for that. I think that's it for this week. I'm just having a look at anything else that I might have missed. We've covered uranium there. We've looked at oil briefly. We've covered JP Morgan. We've covered Trump and the mineral vault. And again, I think that worked hand in hand with the big sell-off that we saw last week. We've seen that gold and silver are bouncing back nicely. Again, it'll be interesting to see how they finish the week. But ultimately, just remember that the fundamentals have not changed. They are still the same. They are unlikely to change. And as I have said many a time doing these videos and on the writings and when recording podcasts, if you are trying to add to your physical position in gold, in silver, in platinum, palladium, whatever it might be, then dollar cost averaging in is going to likely work for you. And the reason I say likely is I'm not here to offer financial advice. You have to do your own homework and do what works for you. But because the fundamentals are key, because they're unlikely to change, and because we're going to see printing presses fired up, QE, however you want to call it, things priced in fiat currencies are likely to go up in value. That's gold, silver, etc., etc., etc. Those fundamentals have not changed. So if you're looking to add to your, or even start a physical bullion position, dollar cost averaging in is likely to be a very good thing. Keep a spreadsheet as well. I've got a spreadsheet. I highly recommend you keep one as well. If you've really got a good position and you want maybe more exposure, then I'd highly recommend you go check out mining stocks. Now, just because the silver and gold prices are likely to rise, that doesn't mean that all mining stocks are going to do the same. You have to look at jurisdiction. You have to look at management. You have to look at risk. There are so many different things that you have to look at. So bear that in mind. It's not an automatic win. You still have to do your own homework. But if you don't want to add to your physical position, maybe the miners are the place for you. And of course, if you're trying to trade the market, I highly recommend you go and look at someone like Gary Savage. Gary is very good at what he does. He's been on the podcast a couple of times before. The point of me saying all of this is that your mentality with regards to these markets is going to change depending on how you are trying to profit from them. And no profit is guaranteed. And it's up to you to do your own homework. But if you're going to buy physical bullion or you're looking at buying mining stocks, the likely thing is that your mentality is going to be different than if you're trying to trade the market. And that's what we have to bear in mind with increased volatility. Again, on the commodity wrap, we looked at the candles. We look at the candles every week. We saw that there was an extreme candle last week. It looks like there's going to be another extreme, funny looking candle this week as well. That's just the gold chart I'm looking at. Again, it looks similar in silver as well. There is going to be increased volatility. Just be careful of the bigger powers, and also remember that the fundamentals have not changed. The bounce back ability of gold and silver, I think, will surprise people. It looks like it's already surprising people. It might surprise more people. And also remember, after everything I've just said, that the masses, so main retail, they are still not involved in this market. They might be waking up a little bit. They might be smelling that coffee, but they have not really woken up yet. The minute they wake up and all that extra cash comes flying in, I believe there's going to be one direction that everything's going to go. And that is to the upside. Again, that's not a guarantee. So I always have to be careful with my words. But just remember the bigger picture. No matter what happens on a day-to-day basis, just remember that bigger picture. And if anyone out there is listening and they are a Seahawks fan or they are a New England Patriots fan, I sincerely wish you the best of luck. I wish the Seahawks the very best of luck for the coming Super Bowl on Sunday. You'll notice with my wonderful Jets jersey here, I hope that the Patriots do not win, but we will see. Let's see what happens in the Super Bowl on Sunday. Thank you very much. As per usual, if you're yet to subscribe to the Contrarian Capitalist, please do go and do so. contrariancapitalist.substack.com. You can become a free subscriber, get a feel for the channel first, of course, and then if you want to take the next step, that is to become a paid subscriber. You can do that. You can also become a founding member, and a founding member is a one-off investment for life. So you pay a set amount, and that's it. It never renews. You are a contrarian capitalist for life. I should point out that with founding members as well, there was a slight issue in the Substack back office recently. That has all been corrected. So for those that paid for a founding member and saw a renewal button, that should not be there anymore. All of that's been corrected. I sat down and done that last weekend. So I think everyone, as far as I can see on the back office, is completely up to date. But contrariancapitalist.substack.com, I say, please do become a free subscriber if you're yet to become one. Give the channel a go, and then do become a paid subscriber. That will give you access to the traffic light system on the commodity wrap, which comes out every Friday, the traffic light system that comes out on the market wrap every Sunday. It also gives you early access to the podcasts, most of the podcasts. It gives you exclusive access to the mid-month macro. Also gives you access to the end of month macro as well. And it also gives you access to a lot of the written content when we are diving into particular companies as well. So for the price of a couple of cups of coffee a month, of course, I would say I highly recommend it. But again, get a feel for the channel first on for free, and then please do upgrade and join the growing community as well. Have an absolutely fantastic rest of the week. I'll get that episode out with Brent Johnson tomorrow. I'll record with Tom hopefully Friday morning, and I'll be back with the commodity wrap on Friday afternoon. Have a great week.